But with the temptation, he will also provide the way of escape, that you may be able to endure it. Philippians chapter 4, verse 13. I can do all things through him who strengthens me. Isaiah chapter 41, verse 10. Fear not, for I am with you. Be not dismayed, for I am your God. I will strengthen you, I will help you, I will uphold you with my righteous right hand. Deuteronomy chapter 31, verse 6. Be strong and courageous. Do not fear or be in dread of them, for it is the Lord your God who goes with you. He will not leave you or forsake you. 2 Corinthians chapter 1, verses 3 to 4. Blessed be the God and Father of our Lord Jesus Christ, the Father of mercies and God of all comfort, who comforts us in all our affliction, so that we may be able to comfort those who are in any affliction with the comfort with which we ourselves are comforted by God.
Good morning, everybody. Hope you're doing well. Welcome to another amazing weekly prep day. Hopefully you guys had a safe week last week. We had a lot of things go right. Let me know in the chat if you can hear me okay. If you could see everything okay. Let's get that confirmed before we get started. So yeah, just let me know in the chat. You can hear me okay? Clear. All right, perfect. But yeah, so hopefully you guys have had a good weekend so far. We got a good amount to discuss today, as always. But yeah, we see that there's daylight savings time over here in the US. So I guess that's happening today. If not, already happening. The time's probably already adjusted. We don't really necessarily got to worry about the time changes because the markets go off of the 24-hour cycle. So it's like military time. So whether you move forward or not, or backwards or not in terms of the time, it won't really affect anything really. That's something that people get stuck up on, right? And they think, oh my God, is it going to affect something? And it really doesn't really do much. But yeah, so that is what's happening today. If you look at next week, we have a very busy week. NFP. We got unemployment claims. We have FOMC person talking. So we'll see if that presents volatility. Customer sentiment idea down here, or the news event, is going to be pretty important to see what happens. I do see that we still have the stupid tentative nonsense. So it may not allow for this to come out. We have it for surely on Wednesday. There's some type of conversation about it. PMI. So Wednesday, in my opinion, is going to be the most volatile day. Tuesday, we may not even have any news because it's tentative. Sometimes the tentative goes through, sometimes it doesn't. I guess with the government shutdown, it's for whatever reason they've had an issue trying to give this data. Not sure why they wouldn't put the information out. It seems pretty ridiculous. But yeah, I guess we'll see, right? But yeah, so we should have a pretty busy week. It is NFP protocol, so that means everything is cut by half, for those that don't know. Everything is cut by half in terms of risk. We have 1 to 2 trades, as we always generally focus on. If it's uncertain and you take a loss, I encourage you to study. You guys are going to do whatever you're going to do, right? But if you want my opinion, that's pretty much how I operate NFP week. The first 2 days, Monday and Tuesday, generally can have the most clear, I guess, type of price action. If it's very slow going into the NFP, like if it just doesn't do anything for the start of the week, just sideways all the way through Wednesday, then you could rest assured that the NFP announcement is going to absolutely crush whatever was left, either both sides or you just really accelerate to one side. NFP is a 2-stage event. Same with FOMC, they're very similar in how they deliver their characteristics. So you want to expect that even if the news comes out, if there's another news event later, even if it's a yellow folder or an orange folder, you can rest assured that that's probably going to be what they use, because everyone thinks right when the news comes out, they got to be a part of something. And so they weaponize that against them. And NFP being a 2-stage event, if there's multiple news happening, not at all the same time, but one at 5:30 or 6:30 a.m. Pacific Standard Time, and then there's one at 7, generally it'll lag the response or go completely against what the overall direction is going to actually be. And even if it is going to go in that same direction that it starts off at, when there's a news event later, you can rest assured that it's going to come back against you almost every single time. If you go study this, you'll see that what I'm saying is true. If you haven't already confirmed that with yourself anyway, just through experience. All right, so okay, let me ask you guys in the chat, what is the first thing when we're looking at the news? What are we thinking of? Aside from, daily, weekly profiles, that's part of it. But what is the concept that we think of right when we look at the news? Yep, exactly, Fritz. Weekly Power 3. So each week has a characteristic. So let me ask you this. What is Sunday and Monday's characteristic inside the weekly Power 3? From that weekly open. Sunday's open. The new week opening gap. Okay, manipulation. So the first 2 days, right? Sunday and Monday, what characteristic do those two have within the weekly range? Consolidation, manipulation, right? And then Tuesday, Wednesday, how about that? What does Tuesday, Wednesday generally present? If it's a perfect Power 3, right? What should we expect Tuesday and Wednesday to be within Power 3? Tuesday manipulation. Okay, anyone else? So Sunday, Monday is consolidation, manipulation. Okay, you said accumulating. What else? What else could it possibly be? If Sunday, Monday is accumulation, manipulation, Tuesday, Wednesday, since it's the middle portion of the week, what does that generally represent? And then we'll get to Thursday and Friday as well after we talk about this. So thinking of accumulation, manipulation, distribution, right? Yeah, so Tony, you got that right. So Sunday and Monday, if it's accumulation, manipulation, Tuesday, Wednesday is when the high or low of the week forms, and it's generally the distribution or acceleration of the Power 3 on the week, right? So accumulation, manipulation to start the week. Sometimes it bleeds into Tuesday. Not always, but sometimes it does for the accumulation, manipulation. Tuesday, Wednesday has a 70% chance of creating the higher low of the week, right? And so that's the lion's portion of the weekly candle, right? The body of the candle that's forming, the largest portion, is going to be towards the middle of the week. That's why Tuesday, Wednesday, Thursday are what ICT recommends as the best trading week or the best trading days in a week. Okay? And then of course Thursday, Friday, what is that? If we've been really accelerating throughout the week and we hit a PD array or some important higher time frame liquidity pool going into Thursday or Friday, depending on what day it accomplishes that, what can you expect Thursday and Friday to be. Sorry about that. So yes, so Sunday, Monday, accumulation, manipulation. Tuesday, Wednesday, distribution. And then what does Thursday, Friday create? If it's been accelerating, possible reversal, or it caps the weekly candle, right? It starts to create the wick. Either if it was running higher, it's going to create a wick by pulling against it 20 to 30% generally if it's accelerated throughout the week. So again, just to review, so this doesn't ever have any more confusion, right? Sunday, Monday creates what? Let me know in the chat. Sunday, Monday creates what within the weekly power 3? Let me know in the chat one more time. Yeah, consolidation, manipulate. Very important to have both of those terms because it doesn't only consolidate, it doesn't only manipulate. It consolidates and manipulates or manipulates, right? So consolidation / manipulation within the weekly range. Then Tuesday, Wednesday does what? Let me know in the chat. And Tony, it's not always choppy, right? That's why it's kind of, these two terms have to be together. Consolidation, manipulation, accumulation, manipulation, right? And then again, Tuesday, Wednesday, right? What role do those 2 days play? And we know it creates the high or the low of the week, depending on narrative, 70% of the time. But what is the label, right? What is the general characteristic that we can expect or go into every week expecting Tuesday and Wednesday to be generally? Distribution, okay, good. And then Thursday, Friday, if we accelerated the whole entire week and we hit a PD array, whether that's some higher time frame high or low, depending on narrative, or if we hit a PD array, right, order block for value gap, that's opposed to what it is that the week did. What should we expect Thursday and Friday to generally be if that condition manifests? Reversals, right? Or cap of the weekly range, basically creating the final portion or closing out the rest of the week, right? So yeah, hopefully you guys were able to write that down in a list, right? We talk about this every week, so it's very important that you guys have it on a piece of paper as far as what these characteristics are, because it gives you the ability to anticipate as you watch price and gain experience in this realm of things when it comes to the weekly candle and the dynamics of the weekly power 3 and what each day's characteristic has every single week, every time you go into one of these days. If you understand this, it helps you anticipate over time, right? Of course, nothing's a silver bullet, right? But this is absolutely something related to price navigation and weekly ranges. And of course, in each day, there's a power 3 happening that's setting up one of these characteristics, right? Whether it's consolidation, manipulation, whether it's distribution, or if it's capping the weekly candle. Okay, so hopefully you guys could see the value in that and why that's important, and why we start there every single week and talk about power 3 right away, every single time, because the weekly candle is going to form whether we want it to or not. And the logic that these candles use or operate within to deliver these candles is rooted in accumulation, manipulation, distribution. When do those things take place? Well, for the weekly candle, we just basically described that. So you could start to anticipate it as you walk forward, navigating power 3, weekly candles, weekly bias, and things related to that, right? So yeah, does all that make sense, guys? Let me know in the chat. Throw a 1 in the chat. Appreciate you guys sending out your answers. But yeah, if everything makes sense, just throw a 1 in the chat. Okay, 1. Okay, let's make sure 1. Okay, 1 more at least. Okay, cool. And yeah, if you guys have any questions as we walk forward, we have a lot to talk about. So just let me know. Just send it in the chat, okay? Yeah, so now we're coming to our first victim, okay? That has to do with the yields. Okay, can anyone tell me in the chat what the yields influence? Generally, right? If everything's symmetrical, what does this influence? The yields. So we got the bonds and we got the yields. We're starting with the yields right now. So what do the bond yields influence? Okay, yeah, exactly. DXY, exactly. So if this is going higher or if it's going lower, we have to use that information when we go to the DXY. And it's reverse to what the indices do and the foreign currencies and the commodities generally. So we take this information, this is the reason we start here, we take this information later on when we get to the asset of our choice, okay? So if we're looking at the yields, okay, we should go to the monthly chart. For those that maybe have been with me for a while, what is the first level or levels that we want to identify? So let me know in the chat. This goes for every asset when we look at it. When we start at the higher time frame, what is the first thing we look at? Okay, Fritz said most recent highs and lows relative to that time frame, right? Which highs and lows, right? Okay, yeah, there you go, Mike. Previous week's high, previous week's low. There you go, exactly. Right? So we're going to look at the current candle, or this is at this point the previous candle. Okay, so we look at the previous candle's high and low. Wait, this is a monthly, whoops. Okay, monthly low. We got our monthly high. Okay, so before it gets to any, why is this important, right? Why is this important to do? As basic as it is, right? Why is this important to operate within, right? Or mark out first and foremost before you think about anything over here, anything up here, any PD arrays aside from this. Why is this important given what we've talked about for the last like 11 months? Why is this so important to start with? Once we're done with the news, why is this the next thing we look at? Closest liquidity pools, exactly. But why outside of it being the closest liquidity pool is it important? Right? What is the functionality? Right? Like what needs to happen before anything else is thought about? Right, relative to this, right? Let me see if you guys have the answer to that. And Tony, volume is not necessarily, because volume is very subjective. You could have one trade on both sides, a person with one contract on both sides, and price can shoot up 1,000 points. So volume doesn't necessarily matter so much. That's why we don't really refer to it too much, the volume. None of the indicators, no volume profile, none of that stuff, because it's very subjective, right? And it doesn't need much volume for the algorithm to reprice to a level that the hand wants to send it to, right? Should be the nearest targets for either manipulation or distribution. I mean, that's a good thought, Fritz. But we want to remember that the reason that this is so important and why this is something that I've been pointing your attention to for so long is that even if it wants to come down to these levels down here or attack this wick further or even get up into this range from previous or even attack these highs up here, we have to break these candles high and low, this candle's high and low first. And this is the monthly chart. So it could be reaching up there for a week, 2 weeks. So that could be a drawn liquidity, right? Either of these highs or lows, depending on what it wants to do, right? If it wants to continue to drop or continue to rally. Before it even gets to any of these levels up here or any deeper levels down here, it the next candle is going to have to break out of that in some way, or it's going to consolidate. And this is the monthly chart. So this is very liberating to know that you don't have to worry about or have a target solely set on something that's so far away, that's going to take days, months, maybe even weeks to get to. So that's why this is so important. That's why we start here. That's why from the news, talk about Power 3, kind of look and see kind of what could be the most exciting parts of the week. And then when we get to the higher time frame on every asset we look at, we have to always start with the previous candle, high and low. And then, of course, anything that's in close proximity, right? Like we have this large wick in here. So now we start to look at PD arrays. Okay, we look at this. Okay. I don't have a monthly wick breakdown. Let me actually... make that template real quick. All right, so I'm actually going to pull this over here. It's not too in the way. Yeah, so now we got our monthly wick, right? That's like one of the closest proximity PD arrays. Okay, and then of course we have our high and low from the month, okay? From the current monthly candle that literally just passed. So it's even more important, right? Because we have a new monthly candle about to form today. So again, in order for it to do anything, to get up here or to get down here long term, first and foremost, we have to break through this. We do this for every single time frame. So we do the same thing on the daily chart. What's the current daily high and low? Previous daily high and low, right? And like for the daily chart, you could use the last 3 days, highs and lows. That's like the most relevant liquidity pools aside from the current the current daily high and low, right? But this concept, I want to really drive this home. Same with the Power 3 thing that I just mentioned a second ago. You guys really want to really nail that down. Because you're getting in sync with kind of the way that I'm thinking, the things I think that are important, and what keeps me calibrated to what's important right now, right? And what I should be thinking about. And I'm always thinking of Power 3. You guys know that I have an indicator that shows the daily candle, weekly candle, 1 hour candle, 4 hour candles from like the last couple hours. And Power 3 is happening on those time frames too. And the same thing is relevant even if you're on the 1 hour candle or like a 1 hour time frame. The previous 1 hour candles high and low is the most near term liquidity pools outside of this, right? That's obviously working inside of this larger view, but you can see how fractal this is and how you can use it on each time frame to nail down what are the most important highs and lows, right? Or the most near term important highs and lows. But again, don't lose sight on the fact that it's working within the larger view. Okay, never lose sight of that. Okay, so yeah, hopefully this makes sense and you guys got the chance to write down what I've just been mentioning. If you guys got questions, please let me know. But these are things that I want you guys to, whenever I ask for it, you need to be able to quickly remember what it was, right? Because when you're on your own, you're going to have to be able to rely on yourself. And I want to make sure that I really get these important factors driven home. But yeah, let me see. Let me read some of the chat. So keeps short-term focus on structure inside the monthly candle. Yeah, Fritz, that's a good way to look at it too, right? But it just essentially keeps you in line with what is most near-term. Because think about it. If this was the 1 hour chart, let's just hypothetically say this is a 1 hour chart. In order for us to get down to this low over here, if this was the 1 hour candle, what has to happen? It has to open up a candle and break through this candle first. So what's the most important liquidity pool for that time frame? The current candle's high and low, because there's buy side and sell side above and below each of those highs and lows. Okay? This probably seems like a basic thing, maybe not to some, but it's one of those really foundational key elements to price navigation and drawing liquidity, right? Drawing liquidity or bias and narrative, it's a very layered understanding that's required because you're managing multiple things: liquidity mapping, PD array relationships, higher time frame, direction, models, kills, the timing, kill zones, macros. So you're juggling a lot of things in terms of what's important. But this is, at least in my opinion, one of the easier things that we could focus on. That's instantly applicable and is very, very effective. And it kind of removes the guesswork, like which high and low is important. Well, the current one, first and foremost, is the most important aside from everything else. Even if we're going to get up here or down here, it needs to break that first. So if you take that logic to the monthly chart, you can see how you could potentially layer your directional opinion on something that is very, very short term, or somewhat short term, right? Or near term, I should say, right? And when a new week starts, right? Like I said, the previous weekly high and low is important. It depends on if there's more next to it too. If there's like another previous monthly low or weekly low, right, that's close to this, that becomes important too. But in this case, before that, before the low is even targeted, we have to break through some of the wick quadrants. We have to break through. When the new candle forms, this wick can be broken down as well. Okay. Can shrink that a little bit. And so when this new candle forms, we have this wick, right? We're kind of inside of this one, so these quadrants will also be reactive. Again, you don't have to have all these, right? You don't have to go above and beyond with the wicks. It just helps you build a grid, right, of dynamic levels that should be reactive in price. Okay? Why is this important, right? Why is all this stuff important? All this stuff is universal, right? So when we get to the NASDAQ, right, when we get to any other asset, we're going to be doing the same exact thing, looking for the same exact things relative to that asset class. Okay, so, and then again, this is extremely important for us to understand what this is doing, what the characteristics are, and what the bonds are doing as well, because like you guys mentioned, right, like you acknowledged, this impacts what the DXY is going to do, whether it's bullish or bearish overall, right? If it's going to be bullish, you want to have the yields behind the DXY going higher because the currencies of every country chase the yields of that country when it comes to interest rates. Okay, it's just the way it is. I don't know why. All right, I'm not a financial genius, right? I don't know the ins and outs too much. I just know the relationship because that's what matters when it comes to me making decisions. And you could be the same way too. If you have more knowledge on it, I'm always definitely interested in anyone that maybe is financially, like education-wise, or involved in the financial industry. But again, none of the intricate details matter when it comes to making decisions, at least for me. I just need to know the relationship, right? And I need to understand what is going on in the chart so that I can take that, since I don't trade this asset, and then go put it into something that I do trade and use it as an influence, right? So yeah, don't get too caught up in, oh, these are the interest rates. What does that mean, right? Don't even worry about that, right? Just worry about the relationship, right? When it comes to analyzing other assets outside of the one that you engage, you want to make sure you're concerning yourself with what the relationship is and how this can help you get to a decision, right? Or, trust behind a decision. And that's why we start here. That's why I love these assets, right? The bonds and yields. I may even end up trading it at some point later on. Not right now, right? I'm cool with what I trade already. But yeah, just some things to consider. Okay. So again, with that being said, right, we do have this wick. Maybe I'll make this a little bit smaller. It's more near term. Whoops. Didn't mean to do that. Made it incorrect. There we go. So yeah, with this being the case, right, we'll keep one thicker, one smaller. And as price prints lower into it, I want you guys to have this on your chart. Maybe have a template. And then you can study what price does if it does break down and go lower, right? You'll study what the reaction is at each of these levels in here, okay? And then we'll kind of, It's a good study when you're doing that. It shows you how important these quadrants are. You don't obsess over them. I do recommend that you have a template for them so you don't have to have them on your chart all the time. Or have a piece of paper and write down where all the wick quadrants are on a piece of paper. So then whenever price is trading to a level for whatever asset you're trading, you can just glance at the piece of paper and see that's a level where a wick quadrant is at. And you want to study what the reaction is because it can hold, right? If you're trading lower and a PD array forms on, say, the 1 hour chart within a monthly wick, that PD array, if it's bearish still, may be very strongly reactive, right? Especially if it's overlapping or laying on top of a wick quadrant and you have a logical target, like maybe the previous month's low. Maybe it's maybe previous week's low, right? So yeah, just another one of those reinforcement mechanisms you can have when you're managing a trade, okay? Or trying to look for an entry, or using a PD array. Because a lot of times they're much more high probability when they are laid over top of a wick, right? ICT taught this recently, but it probably went over many people's heads, as a lot of stuff does, because there's so much to learn. But that's something that you can consider when you're doing this type of study. And when we're going into this new week, that's what we're going to be anticipating. These wick quadrants from the previous candle. We also have this one too, so as long as we hang around inside of that, it's going to be important to have that on your chart. Something like this. Okay. It is all kind of the same color, so maybe I'll... I don't know. We'll see. We'll see what I decide to do. I'm not going to have this on there right now. But yeah, I'll probably refer to it throughout the week. So just keep that in mind. But yeah, so when we look at the close proximity PD arrays here, because we now have our significant high and low, and there's no other high and low that's really relevant to this time frame other than these and these, which in my opinion are too far away. It's going to take a while to get there. The most important, most relevant PD arrays to look at is, again, the low here, the wick quadrants, these wick quadrants. We do have a monthly fair value gap in here, which I'm going to keep in mind. I could find the fair value gap. Make that go to the top. Here it is. Okay. Oh wait, whoops. Didn't change the color. Uh-oh. Sorry about that. All right, so we'll keep tabs on this because it's close, right? It's not like way up here or way down here. This will be important, right? Same with the wick quadrants in there. We have to study how it's going to react around that, okay? But yeah, just given what we see here, if we zoom out a little bit, let me take some of the other ones off. It's kind of a mess, right? We're still kind of messy, sideways, kind of overlapping. It is looking like it's opening up a bit. We do have this monthly order block in here, which I'm going to actually use that. I think I have a monthly order block label. There it is. Okay, so, and this will probably be all I'm really going to refer to on this time frame. Just kind of remove some of that. If we break this in half. Yeah, that's a pretty good eyeball, huh? Eyeballed it perfect. Yeah, let me change that. Okay. So yeah, we're going to be definitely paying attention to this and seeing how this reacts, because look at what price has done. The monthly order block's clearly been used as something important, right? We've definitely traded into it. We haven't quite invalidated it. Okay, so we got to think of our invalidation principles, right? What is that simple invalidation principle? Do any of you guys remember? Let me know in the chat if you remember. Let me know in the chat if you guys remember the invalidation principles, right? When we're looking at price, what's the simplistic way of invalidating a narrative or validating a narrative or move, right? What is a simple process I've told you guys about? Do you guys remember? Let me know in the chat. Yeah, 3 PD arrays, exactly, Mike. Exactly. So if we look at this, we have one PD array being a swing low. We got the order block here. And then, of course, we have like some of these wicks down here that we could use as another PD array as well. But we don't even have to think about that, though. We also have this fair value gap in here. We have a volume imbalance in here. We have a suspension block right here. Okay, so if this continues and respects this, say it trades up and then breaks down, closing below this order block, we have more than 3 PD arrays being invalidated. So that puts us away or in a position to think differently than price going higher, and then start to seek something more in line with that, which would be, in this case, the fair value gap, and then, of course, the wick quadrants and these lows in here. Okay, so depending on what price does here, which, we're at equilibrium too. If you go from this low here to the high, right, so we can see right here, right? So low to high, we have 50% right there. So price is kind of hanging around that. Okay, so we're at a discount right now, right? So relative to this time frame, if we're going to go higher, if you think buy low, sell high, right? We're inside of a PD array that could give us the chance or probability the price could want to continue to go higher based on this time frame. We're going to have to close below this for us to really get away from the potential interest for this to continue going higher on this relative to this time frame. Okay, it has been going lower. We have been riding that lower, but in the grand scheme of things, that may be short-lived, right? It may turn around at some point at this particular level, right? So there's a chance for this to either be a retracement that continues to go lower, because maybe this shift in market structure ended up, giving us that early sign that it's going to change, because that's a change in the state of delivery, right? We got this up candle, right? The order block breaks down, close below it. So now we got to see if it's going to respect that. So again, if we react here, right, and refuse to get up into this level up here, which we talked about, this low to that high being a balanced price range. If we respect that and continue to respect that, maybe it wicks up above this candle for the month, next month, to use it as counterparty liquidity to decline, basically gather up or accumulate more orders, and then try to continue going lower in terms of power 3 for the month. Or we could see it, get above this fair value gap and then hold it as support and then displace. That would put me in position to think that, okay, this order block is fully still intact, and we're not necessarily interested in trying to get lower again or even further. Okay, let me actually put equilibrium. Okay. So yeah, in terms of, again, the most significant liquidity pools, right, we got these, the high and low there, and we have some of these PD arrays in here that we're going to have to monitor and see how it's going to treat price. And again, if we close below this, that fully confirms that this market is going to continue to drop, makes it a whole lot more high probability that this wick, all the quadrants should get blown out, or at least attempted. It's already kind of attempted in here. We've kind of failed to breach the 50% of this wick. So because that's the case, if that's followed by us inverting this fair value gap again, or reclaiming it, using it as support, and then not showing that it wants to go lower from there, that'll just justify that this was a pretty strong bullish indication. And then the fact that we didn't close below this order block kept us in line with our higher time frame narrative, and this being a potential retracement to go higher. Okay, we do got relative equal highs up here. I don't think this was left randomly. We'll see, obviously, what happens. We're at a turning point right now, right? It's going to have to make a decision. It's either going to rally from this discount, from this PD array on the monthly chart and go higher, or it's going to disrespect that because we're in the middle of the range here, and we're kind of, we've been bullish, and it's at a level where it could rally. Because that's the case, we have to consider what we've just been talking about, okay? And, we'll monitor going, because it's NFP, right? It's going to set the tone for whatever it's trying to do, right? So it may wait until that moment takes place, because remember, the higher time frame levels, higher time frame moves, reactive responses from the higher time frame require institutional sponsorship. And the news outlets, or not outlets, but the news events that come out, the news releases, they can act as macros, basically a timing element for you to anticipate when a higher time frame move could run to a PD array, or if it's already in a PD array, run away from a PD array, right? It can help you with timing, using the news as basically higher time frame macro elements. Similar to how we used the lower time frame, last 10 minutes, first 10 minutes, you can use the news as a very similar tool, but for the higher time frame. Again, I don't think anyone else on the internet has talked about it in this way. I've looked at so many people's content, so many ICT traders, and over the last 6 years, I have not seen anybody talk about it, right? In this way, so you have an unfair advantage thinking about things this way. In the 3 PDA rule, ICT mentioned, I believe, 2.5 years ago, and most people still don't even talk about that, right? So I'm narrowing your focus to things that are really important that I use, so hopefully it's beneficial. I know a lot of you guys in the chat, those of you that follow me and consistently hop on, especially those in my private group, you guys have really gravitated to these things, and it's been giving you very clarity building results. So I'm appreciative of that. Let me see. Does being near the quarterly low have any significance in terms of 3 PD arrays? So would you say a quarterly low is a PD array? Fritz, would you say that that's a PD array in itself? Hey, what's up, brother? What's up, Carlos? Appreciate you hopping on. Yes, a big one. Exactly. So if we're thinking about 3 PD arrays and price is close to a quarterly low, because it's a PD array, if it's within reason, right? If it's way down here, it's not really going to be much important, right? But if we go to this quarterly time frame, we'll see we swept the previous quarterly low there. See how that could have been used, the most recent high and low for the quarter, right? For the whole entire quarter, this candle, whoa. Yeah, so in this previous quarter that just passed, okay, the whole entire quarter could have been used to potentially draw on the previous quarter's low, because that was obviously, for the whole entire 3-month time window, was clearly the draw on liquidity. Couple that with an order block, a wick, right? The upper quadrants of the wick. So you can see how this concept that I've been talking about for the last 12 months, well, longer than that, but here publicly on YouTube, you could see how important this is and how narrowing it is for your bias and narrative, how simplistic it could create things, right? Obviously, there's layered effects to bias and narrative, which we cover a lot of different bases on these Sunday calls. But, you could see how that logic, not overcomplicating things, thinking about all these other things down here, and oh my gosh, all the mixing all these things together. Instead of doing that, you could see how you could simplify things a little bit, right? So if we're close to a PD array, right? Anytime a new candle forms, the previous candle's high and low, even if you're on the yearly chart, is going to be significant, right? And if we're reaching into a potential level relative to whatever time frame you're on, and it just happens to be a quarterly high or low, it could be significant if it makes sense for it to sweep it, right? If you're thinking of power 3 from a monthly perspective or a quarterly perspective, I wouldn't say that you would disregard a quarterly high or low, because again, it is a PD array at the end of the day. But when you're using the 3 PDA rule, maybe this will answer some questions you guys might have. When you're thinking about the 3 PDA rule and you're looking at a particular time frame, this monthly time frame has its own 3 PD arrays that could provide evidence that it's invalidating or validating something if they hold or fail, right? But when you go to the weekly chart, it may have 3 PD arrays in close proximity relative to that time frame too. That could maybe give you an early sign that the monthly 3 PD arrays or narrative could be either validated or invalidated. So each time frame has its own story that it's painting or operating within, that's working within the higher time frame perspective to basically create that higher time frame perspective. Things happen sooner or give you early indications or early signs, right, that things may either be invalidated or validated, right? Like a delivery from this monthly chart going higher is first going to be seen when you look on that lower time frame, right? You're going to see early signs of shifts in market structure, inversion for value gaps, PD arrays being violated to the upside, right? If we're bullish, right? And if you put that in context of like us reacting from this monthly order block, trying to go higher, this reaction here was seen earlier, right? Or started giving early indications that it was going to bounce higher when you go to those lower time frames. Okay, so again, this is all related to price navigation, targeting, just being able to navigate the price action, right? And what's important versus what's not so important. All right, and then of course, as you go lower, we narrow things down even further. Okay, using these same principles. Okay, so again, I hope I answered your question, Fritz. When it comes to us being near a quarterly low or high, and the significance that has in terms of the 3 PD arrays. Each time frame has its own, but again, it's all the lower time frames work within this larger one, so you cannot get too bogged down by those lower time frames, especially if you're kind of messing with the seconds chart. For the record, I just this year started using the seconds chart. Those of you in my private group, or those of you that just have been with me since the start, you know that I kind of shied away from the seconds charts because they weren't necessary. First of all, it's not mandatory to use those time frames, and it requires a heavy understanding of price navigation from higher time frame to lower time frame. Because if you're just on those seconds charts, you're going to be absolutely obliterated because you're going to get fooled and convinced that that lower time frame seconds chart is more significant than it really is, right? Relative to, whatever's taking place. The lower time frames are only significant when you're in line. Well, the lower time frames, like the seconds chart, in my opinion at least, are only effective when you know how to navigate and paint the narrative on time frames well above those lower time frames, right? Like you could be, trading a 15-minute retracement lower, but if you're on a 15-minute retracement lower to go higher, right? But if you're on the seconds chart, you'll see that 15-minute decline and be fooled thinking that the whole world's ending because it'll look dramatic, when in reality it's just a retracement to go higher, right? And that's a problem with all the different lower time frames if you're not yet experienced enough to navigate or have the right tools and perspective to navigate those higher time frames, let alone those lower time frames, okay? Because it all works together inside the larger view. All right, let me see. Big step in understanding. Yeah, no worries, Fritz. Appreciate your question. So where are we in terms of internal range to external range liquidity? So on the monthly chart. Okay, so we're essentially reaching right into internal range liquidity if this is going to be bullish. I would really prefer to see one more up candle form and then violate that up candle, because that'll be a double change in state, which is something I really enjoy seeing because it confirms order flow in the highest order when you see something like that. Especially when you have like something like this. Like it could be retracing into this monthly order block to then go higher and then target these relative equal lows or relative equal highs that were placed. We also have engineered buy-side liquidity in the terms of a failure swing, right? 1, 2, 3 layered buy-side liquidity pools, while this one failed at the rejection block here, because that's what this is. That's a rejection block, right? So in terms of internal range to external range, you could make the argument that we went from basically stops to stops here. It kind of failed the response to be, well, the aggressive response, aggressive reaction off of this monthly bullish order block. Okay, so now we're just in a turning point, right? We're in an area in price. We're at a discount. We're at a monthly bullish order block. We have been going higher, like overall, right? Obviously, the last couple months have been bearish, but that's simply just to set up this potentially to continue going higher. If the DXY is showing us anything right now, it should be able to see this go higher if that is to be trustworthy. The buy side delivery on the DXY. If it's long term going to be bullish and it's not going to continue to drop any further, it's going to at some point have the yields get in line with it, or vice versa, right? If the yields are rallying aggressively and the DXY is consolidated, eventually, right, the DXY is going to fall in line with what the yield market's doing. Because again, it's just that relationship, that dance between those assets that correlate or reverse correlate to the bonds and yields. I mean, it's significant, very significant, because it's just how this stuff works, right? I mean, and there's no arguing it. Like you could literally go ask anyone, even if they're not an ICT trader, if they study this asset, they understand that if they, are knowledgeable, So, and it's very significant. That's why I start here. That's why I spend a whole lot of time here. Like the whole entire hour has basically been talking about this asset and the analysis on this, the process, the things I'm looking at. Of course, all this can be and is transferred to the other assets too when we're doing our analysis. But yeah, it's very, very significant, right? So again, hopefully you guys understand what my opinion is here. This is all I'll really keep on this time frame. Again, if we close below this, that'll be my line in the sand. And if we break down below this candle's low here, which is the previous month's low, I'll be aiming for the quadrants here, and then potentially we'll see price get down into something like this. This was a previous balanced price range when it rallied up. Okay, so that's why you see it held and never really even attempted to get back at all, right? It just kept going because that was a significant turning point, right? Significant indication that it was going to keep going higher with the BPR, okay? So that BPR is now potentially going to turn into a potential target. If this order block's 50% level gets violated, those of you that have been with me for a while know that order blocks are simply balanced price ranges and moments in price visually where you could identify changes in state of delivery from one direction to the other. And in the proper context, I mean, it's absolutely phenomenal, right? This stuff is amazing. And because a balanced price range, if violated, will encourage price to go the other way or allow for or afford price the ability to go the other way, right? Instead of being bullish, it could be bearish. Because that is the case and the rules state that if 50% of a balanced price range, if 50% of a PD array is closed below, especially if it's aggressive, it'll encourage you to go the other way, right? It highlights flexibility, or enables flexibility, I should say, when you study this deep enough and long enough and get enough experience with it. You visually see that repetitively on every time frame, right? Like if an order block fails, what is it probably going to do? Well, it failed, so it's probably going to go the other way, right? And then you can kind of adjust from there with our flexibility process, right? Our ability to recalibrate in the tools that we use, right? So that's what my opinion is here, right? Let's continue to monitor if this is going to give a response to the buy side, get above this fair value gap. If it does, I'd like to see that act as a support level and go higher, targeting the highs up here long term. Prior to that getting targeted, though, of course, we got this high here, We got this wick. We have this wick here, it's a very large one. So those quadrants will be significant if it trades through that. And then again, if we close below this monthly order block, bullish order block here, that just basically invalidates this order block, and it invalidates this as a balanced price range bullish, and it may look to be inverted. Okay, and then we could start to seek further downside with pretty significant confidence. And again, if the DXY is going to, if this run in the DXY is going to be trustworthy, we need to see the yields get back in line, given it's been so significant, right? The cracks in correlation with the bonds and yields and the assets that are relative to them with their relationships, if they're cracked in correlation, it generally shows you that the conditions we're trading in are not super extremely trending environments. Even though you may see sometimes where it trends, we're looking for trustworthiness, right? We're looking for what can build confidence in our opinion. And it's not only one asset, it's how the dance between all the assets work together that generally can amplify that confidence, that trust, and our ability to hang on to a particular narrative with confidence. Or, it also is used, this process is also used for us to be flexible, okay? Like if, the DXY is going higher, but the yields are dropping aggressively and doesn't look like they want to stop, the next time the DXY hits a bearish PD array as it's moving higher will probably be a moment in time where SMT will form, and then we may see a potential turning point. It may be short-lived in terms of the buy-side delivery, for an example. Okay, so again, these assets and the reason we use this in our analysis so much and spend so much time on it, it has many different tools, or it enables many different tactics to be used and confirmed or invalidated, all in one perspective, right? Looking at this asset and the bonds, right? And then of course, like we talked about, the yields impact DXY, reverse impact to the currencies and the indices, and the bonds positively impact or influence the foreign currencies, commodities, and the indices, and reverse correlates or reverse influence to the DXY. Okay, just so hopefully all these things that we've discussed today make sense, and especially the stuff about Power 3 and kind of how we've just basically structured this breakdown for this asset, because again, this process is repeatable across every asset. It doesn't change. This stuff's always the same. So I want you guys to be at the point where it's unconscious, right? Don't even got to think about it, and this is the stuff that you do. Right. Aside from obviously some of the other personal things that you guys may enjoy using as well in terms of tools within ICT concepts. Okay. So yeah, hopefully I answered your question, Fritz. And this is my opinion for the monthly chart. Okay. So hopefully that all makes sense. Right. So within all of that, right, we do have this order block here on the weekly. I did have this mapped out earlier, right? Throughout the week, we were kind of monitoring how it was using the quadrants of this order block. This is another thing that you can do. You could break the order block into quadrants, and you could start to see the importance of that and how you can get support and resistance that you wouldn't necessarily see or be able to have an argument for, right? You could see that the 25% of this was absolutely used in a very effective way, very meaningful way. Okay, so get it down, let me erase that. Oops. Okay, let me see, weekly wick. So hopefully all this stuff makes sense, everyone. Oh wait, whoops, order block, whoops. Appreciate y'all bearing with me. You guys know that these calls are very long, they're very thorough. I try to not leave anything out and give you the most value I can possibly give you. That kind of just destroys everybody else on social media who are lazy, who don't really want to teach you anything, and want to cater to the signal junkie TikTok brain mentality, which is not a recipe for success in trading. And no matter how badly people want to fight it, it's just going to add to, if you can't sit through detailed explanations about all these highly complex topics that are I've attempted to try to simplify, which apparently I've been at least doing a reasonable job with. If you're not willing to sit through things like this and spend time on it, you're just going to add to the bad statistic, because this punishes impatience. Right? This is literally an industry that's created to punish impatience. And in a world where TikTok brain mentality, 5-minute or 5-second clips is how people are digesting information. In a world like that, this industry is literally a slaughterhouse, because you cannot be impatient. You cannot be lacking thorough understanding and seeking, like things that are overly simplistic, because you simplify everything, right? There's a way to simplify everything, but there's a line you have to draw. It can't be just 1 or 2 steps and one asset, and you just all of a sudden are confident and can make this a full-time income, and let alone trust this as a reliable income. You can't achieve that in 5 minutes, in 5-second clips. And it's unfortunate, but hey, again, this industry is for everyone, but for those types of people, it's not going to end up being for them, and it would just be a waste of time. And nobody wants to waste their time, right? You're not here to waste your time. You're here to learn, So I do my best to make that the goal, right? To get you guys to improve and actually learn. Yes. So why is it not pop? Oh, there it is. All right, so we have that there, okay. Okay, so 50%. All right, so we'll see how this continues to behave. We do have this wick in here, so that's kind of interesting. See how the 50% of that, we've definitely created a fractal low on this weekly chart. Whenever there's a fractal high that forms on the weekly or the daily chart, the next 1 or 2 days, if it's a daily chart you see this on, or the next 1 or 2 weeks, if it looks like it's initiating something like a retracement, and there's a reason, say this was going to go higher, right? Say we had an assumption this was going to break up above, and we had reason to believe it was going to go higher. If there's a fractal low here, you can expect after this third candle, the next 1 or 2 candles may also confirm that as well and do the same thing, going against what was initially taking place, until it hits a PD array. We've kind of already hit a PD array, the wick, the order block, the inversion fair value gap here on that monthly chart. And we also have, taken out this liquidity in here. So, it may not need to go a couple more weeks. If it does, right, if the next week expands through this, that puts this area up here in jeopardy, and it may not be bearish. That would be ideal if we're going to try to trust DXY is going higher long term, right? If we don't think that DXY is going to collapse, this would confirm that we're going to be set for the dollar to explode pretty aggressively for a decent amount of time. Okay. So, yeah, that's something that we'll observe. We have this weekly fair value gap here too. It's also relative to what's around us at the moment. You get the weekly fair value gap, okay? All right, so yeah. With this being the case, it should, if it is going to be bearish, right, if this asset is not going to have interest to get up here, it should react pretty strongly from this area. We have an inversion on the monthly chart coupled with the weekly fair value gap, coupled with a weekly wick that should act as a balanced price range, right? It should be able to hold price below the 50%, which up until this point it has. Of course, we got this monthly bullish order block here that we have to keep tabs on, because if it does respond here and get up above these levels, we have that to refer to as the root cause of the move, right? And then, of course, we use these levels in here to confirm or continue to justify that monthly bullish order block reaction to the buy side if it was to unfold like that, right? And we're at a discount, too, relative to the monthly equilibrium, right? The low here to the high. Okay? So, yeah. With this up being said, I'm going to try to observe this. There's been nothing telling us that this decline is not going to take place yet. So we'll see if this can hold and continue this march lower. Again, if we're still going to see DXY go higher at some point, this will end up finding some support and then continuing to violate to the upside. If we're looking at this time frame, thinking of the 3 PDA rule, remember the monthly bullish 3 PDA rule has not been violated until we completely get below this monthly bullish order block 50% level. So we've got to keep that in mind from that monthly perspective, because this is working within that view. So if this is going to be reactive and confirm this bullish move potentially taking place from that monthly perspective, that monthly 50% of the order block, if this structure is going to continue, we're going to have to see 3 PD arrays get violated on this weekly perspective. Okay, so we have a fair value gap, we have an order block, we have the wick quadrants, and we have the swing high. So that, again, you can see how if we were to displace above this, that would further confirm on this weekly perspective that this monthly bullish order block 50% reaction is very much trustworthy in a more long-term parameter. Okay, but if it fails, right, and it holds this and punches lower, then again, that sets a stage for these lower arguments to be taken into consideration, right, for lower prices. But for now, from this weekly perspective, right, we're keeping tabs on the monthly, right? We see that we're in 50% of the monthly order block. So we'll keep that in mind that because we're right there. But we're going to watch this weekly chart and see, is it going to respond here and start punching through to the low over here? That makes us pretty confident that we may end up targeting this down here. Before that, obviously, we have this and we have the wick or the order block quadrants to get through. I believe there's a wick there too if we go to the monthly chart. Yeah, this wick here that I had outlined. I think we have this current monthly wick as well, or from the previous wick, or the previous candle's wick from October. So we'll watch these levels too. So if we get down below it, I mean, that's just further solidifying that we're going to target lower, right? It's going to keep pushing lower, invalidating this. So that'll be what we're watching for to confirm sell-off, right? How we respond in here. If we're going to trust that DXY is going to keep this bullishness up, so I can repeat it once more so I drive the point home. If it's going to be trustworthy that it's going to go higher for the DXY, this is going to have to rally up. It's going to have to get in line with bullishness at some point. Otherwise, they could flip the switch at any moment and DXY can absolutely collapse faster than you can, become flexible, right? Faster than you can gather your thoughts. It could just instantaneously turn against you if there's no symmetrical market taking place. That's the risk when trading when there's a crack in correlation. Does that mean there's no opportunities? No. Does that mean you shouldn't trade when there's a crack in correlation? Obviously, that's up to you, right? That could be a rule that you make for yourself. If it's more helpful to trade with a symmetrical market, then, great, right? It's the highest probability when it is doing that, okay? But when it's cracked in correlation, you gotta make sure you're very much analyzing what's happening, sometimes waiting for certain stuff to take place, and then just, executing when you feel comfortable, right? But yeah, so this is pretty much all I have to say about this asset. Okay, so our line in the sand for sells, for shorts, is going to be this high up here. I mean, I could say that if we break above this monthly fair value gap, we don't have to take that high. If we close outside of this monthly inversion here and just like reclaim it, that's enough for me to try to consider this as a bullish move. But if we stay below it, right, it's going to continue to keep pushing lower. So we'll see, right? We'll see which one of those scenarios takes place. We are from the low to the high at equilibrium of the range. So again, like I said a couple times already, we are at a turning point. So we have to wait for more information when it comes to this to really solidify what the opinion is for the next couple months or the next week or so. Definitely for the next month, we really got to see how this is going to behave, right? And NFP could be the catalyst to really solidify the price is going to expand higher, supporting the DXYs run higher, or if that expansion in the DXY is fake, we'll be able to see an X-ray view of that being the case if this fails and then continues to drop. Okay, so hopefully you see the importance of what I've just talked about in terms of how we're going to use this and what role this is going to have, and what our opinion is, right? And how it's going to help us with decision making with the other assets. Okay, so yeah, let me check the chat. Do you include the body? Do you include the wick on the order block if the wick is larger than the body? If the wick is larger than the body, it's generally a low probability order block, especially if it's like super tiny body and the wick is just massive. The wick would probably become more significant than viewing it as an order block. Sometimes that's not the case, right? Sometimes they still work out and they're really responsive. But the ones that do fail, a lot of times you'll see that they're really, really tiny. We prefer to not have such a exaggerated wick. I mean, this is pretty much ideal here. If the wick's going to be big, I'd like it to be like this, but I'd like the bodies to be bigger than the wicks for the most part when it comes to order block selection. And of course, stop hunts that lead to the formation of an order block. If you couple that also with the fair value gap, that's like the highest probability scenario of that order block, operating how we want it to operate. Right, but this here, right, this is an order block, like this candle here, for example. This wick is pretty large, so we have to account for the wick, right? That wick is going to have reactive responses to delivery that crosses over those the portions of the wick, right? But the order block is pretty reasonable here, so that open price, that's still going to be significant. So we could come all the way up into that. Ideally, we wouldn't if we're going to be bearish, right? Like ideally, this is going to just react aggressively with little to no effort to go higher and then just slide lower from this level, because the last week already delivered into it. So essentially, it's already created the retracement. So because that's the case, going into this new week, we may see a small manipulation if it is going to be bearish, and then just rapidly reprice to where it's trying to go to the sell side, right? If we closed with this candle, right, say this candle, let's just do this. This is a very important topic right here, actually. Say we closed the week like this. Okay, say we closed the week like this, the previous week. The expectation is going to be this coming week, if this coming week is coming off the heels of something like this, the next coming week has a pretty strong probability that the next candle for the current week in this scenario would end up wanting to reach higher a little bit for a retracement, right? To then try to, continue to deliver lower. Because if you think about it, if this was the 5-minute chart and you saw this happening, right, we would want to or prefer to see price pull back a little bit, reach into the wick or reach into the fair value gap, then go. Why is it any different if we're looking at the weekly chart or the monthly chart? It's very slow, right? So it'll take time for it to unfold in these ways, but it's no different, right? If this was the 5-minute, we would be literally wanting to see it retrace. So why would we not have that opinion for the next week when we're putting it on the weekly perspective? This is something that really, really revolutionized the way that I was learning how to navigate time frame to time frame and how to really dissect these assets, right, from the higher time frames down to the lower time frames. Just asking yourself, if this was the 5-minute chart, what would I be thinking, right? And since it's the weekly chart, right, if we would expect that something like this would potentially retrace, you may be able to find reasons for a bullish delivery, right, taking place within this before it looks to go lower. So you're not just demanding shorts after it's been so aggressive from the weekly chart, right? It kind of helps you calibrate your draw and liquidity effectively too, and time potential retracements, right? This is an opposing PD array to the down movement that happened. So what happened? Price hit it once more and then reacted away, okay? And gave it the retracement, right? So yeah, hopefully that makes sense, you guys. 'Cause, I mean, this is a beautiful example of this concept here, right? Then we took, in this case, external, then seek the internal range liquidity here. Okay, if relative to this being a movement going lower on this time frame. So internal range liquidity, what comes after internal range liquidity, right? If we reach for internal range liquidity, what could be the potential mode of delivery next, right? To anticipate if we see something like this happening. You guys let me know in the chat. Again, don't forget to like the video, subscribe to the channel if you get value from this content. If you got value today, definitely hit that like button. It's much appreciated because we talk about a lot of stuff, lots of stuff, and it's very powerful, right? So really appreciate that. It helps me get in front of more people, and yeah, just it helps me move forward with my mission of helping as many traders as I can reach clarity. So I appreciate you guys playing a role in that, and liking the video, subscribing to the channel, hopping on every week, spreading the word, right? Word of mouth. It's going to help me really achieve that. So yeah, internal. When it's delivered, you expect, if it's going to continue this narrative, this directional opinion going lower, internal range should then be seen targeting external range close after. Because that's just the way it operates. That's the way it goes. It goes from stops taken to inefficiencies. It goes from external range, if we're in a downtrend, externals lows, to internal range liquidity. And then from internal back to external. But again, if it uses this and then inverts all of this and breaks through it, and we go from taking stops to stops and doesn't respect the internal range fair value gap here, that's a break in the sequence. Internal range to external range, internal range to external range. Stops being the low to inefficiencies, and then stops to inefficiencies, so on and so forth. But if we don't see that continue and we're at a PD array that could logically send price higher, and it goes from stops being taken then to stops basically overtaking an inefficiency that should have held, what is that telling you? That's telling you we're not really bearish in that moment, and you're going to have to wait for it to get back in line with that, or be flexible and then go the other way, because that's a shift, right? That's a shift in sentiment. That's a pretty significant turning point, leaving behind a balanced price range, pretty much, right? When we go from stops to stops, that's what we're basically doing, leaving behind a balanced price range. So that's why it should not really have to come back. Obviously, there's depths that we could take this, but hopefully that makes sense enough for you guys to understand. Recent swing low liquidity. Yeah. Yes, we definitely got swing low down here. We got a fractal low, so we'll see what the next couple of days or next couple of weeks decide to do. This coming week, because NFP is happening, it's going to be very significant to set the tone for the next month. So yeah, we're going to be very, very much paying close attention to what happens in here. Okay. So yeah, let me ask you guys: does it make sense as far as what our opinion is on this? Hopefully, you guys got value from some of the things that we've talked about. But yeah, just let me know in the chat, because all of this is pretty much the same stuff we're going to be using going into the next couple assets. So yeah, let me know in the chat. Throw a 1 if everything makes sense. If you got any questions, let me know before we move on. Okay, Fritz, Tony. Okay, definitely. Okay. All right, so yeah, that's our opinion on that. And let me exit this. And now we'll move to the bonds. So if we're looking for the yields to retrace higher to go lower potentially, what do you think we're going to be looking for on this in these assets? Right? We're going to be looking for the opposite, right? So if the other assets being the yields, right? If those are going to go, or if we're going to anticipate potentially the yields going higher to go lower, unless it invalidates with some of these levels up here, we're going to be looking for the same thing to happen here, only the other way. So if the other asset's going to go lower, we'd like this to go higher, right? We got pretty much opposite invalidation points, right? We got the low here being the invalidation for the run higher, and we have the high here for the invalidation for this to go lower. So again, we're gonna just look at the same exact stuff, right? Where's the most recent high and low, right? This is the last 2 weeks high, but we'll use this one as the most current previous week's high, and then we got this as the current previous week's low. And you can see how we're pretty much trading into a bullish order block. It's not only a bullish order block, but it's also a large wick. Okay, if we go to the 2-week chart, you can see pretty sizable wick. And I mean, if this was the 5-minute chart, what would you be thinking, guys? Right? What would you be thinking? This is going to be bearish. We see down close candles holding price. Would we really think that this on the 5-minute chart, if this is what we saw, is bearish? Right? We wouldn't. Right? We would have to wait for what? We'd have to wait for stops to be taken here. A failure to trade away from internal range liquidity relative to the structure here, relative to this time frame, in order for us to shift, to switch our opinion. Okay. Just kind of looking at different high relationships. See if we have any SMT. I mean, I guess we do kind of have SMT in here because this high made a higher high. It's not pronounced enough, in all honesty. So I think we will. I think we'll just keep our attention here. We do have. We have these levels. So again, keep tabs on this, right? The weekly wick. It's also the weekly bullish order block. Let me actually map that so it's there, so you guys don't lose sight of it. Actually, I can I put a, oh yeah, I can. And so the low of the wick, right, on this weekly chart is also the open of the weekly order block. Okay, so that is something significant. So again, even if we're going to target this low down here, or if we're going to target the high up here, it still has to make its way outside of this range. Okay, this previous weekly range. So the most important liquidity pool is this low and that high, and then anything close, right? We have the order block levels, right? So we want to make sure we keep tabs on that for invalidation and validation purposes. So we got the 50% there. Whoops. Yeah, I'll probably try to fly through this one. It's pretty much all going to be the same stuff. We got the weekly bullish order block here, or the monthly bullish order block here too. If we zoom up a little bit, right? Changing the state of delivery here, we'll see if that continues. And on this monthly chart, we're reaching also into the quadrant of this monthly wick in here. And we've had a pretty strong response here. So again, in order for us to believe that this long term is going to be going bullish, we're going to have to see the yields invalidate this potential down delivery. All right, this monthly bullish order block, if it does react and get above this on the yields, when we go to the DXY here, right, we'll be able to use that to potential. What the hell happened to the? Oh, wait a minute. Notice this. Wait, whoops. See, let me see. Wait. So again, in order for this to, influence the DXY to continue to go higher like this, right? We're kind of seeing that the bonds were somewhat supporting what the DXY was doing, right? We've kind of turned around, given that opposing view. So again, if we're going to see the DXY go higher, we want to see this go lower. We want to see these levels get totally disrespected, and then we'd like to see this rally up. This declining is supportive of bullish DXY as well. So if we can continue to confirm that going lower, it's also supportive of the indices and foreign currencies giving us that pretty rapid decline, which we see the influence taking place here. Right? It's kind of what instigated this retracement on the indices. right? So again, for the bonds here, we want to see how this 50% of the order block is going to hold or not. If it doesn't hold and gets violated, that's a invalidation of a balanced price range bullish. And then that may end up leading to a structural change that sends price down to the sell side, which would then drag the indices lower, currencies lower, and it would be significant if we see the yields go higher at the same time. That would be significant for bullish DXY to continue. And then, of course, that would put us in position to target these upper levels here for the DXY, right? And so, yeah, we'll kind of see. It's kind of like a mess in terms of the correlation between the interest rates and the assets that they impact. It's kind of been that way all year because of all the conversations around the interest rates. We've had a lot of economic policy adjustments. So, the correlation's been in and out for the bonds and yields with the assets that are influenced by them. So yeah, you want to keep that in mind. Obviously, keep tabs on things, but if it doesn't look like it's correlating, keep that in mind. Lower your risk because it's low probability. First indication of high probability or low probability is a symmetrical market. So if it's not symmetrical, it's automatically telling you got to cut your risk at least by 25% of your normal risk. Like if you trade 1%, you'll cut it to 0.75%. Maybe 50, depending on how you feel. Right? It's very personal, subjective, but that's definitely a good rule to have. But yeah, so yeah. With that being said, my line in the sand for this to stop going higher, for me to really be confident that it's going to go lower, we have to invalidate this 50% level. Ideally, we break down below this low because that'll be a complete breakdown. And then that'll also be from this perspective. If no swing high forms and it just rapidly gets down below that, that'll be a stops to stops delivery. And when there's a stops to stops delivery, it leaves behind a balanced price range above it most of the time. And that results in a reversal. Right? And if it's on the higher time frame where this happens, it's going to be a significant reversal, right? Same stuff can be applied to lower time frame charts, right? Stops to stops type of phenomenon. But of course, you want to make sure you're rooted in the higher time frame too, right? So yeah, we're going to watch this, see how this reacts, similar to how we're going to watch this and see how this reacts. Is it going to support this and go lower? Structurally, it looks like that could continue to be the case, unless it invalidates these levels in here. And our contingency plan will be, monitoring the high up here, and then we can get in line if that does end up getting fulfilled. And it's the same with this, just the opposite, right? We're going to see how this holds, see if it can push us higher after this retracement that's taken place. We do see on this, the 10-year, we definitely want to see how this is going to behave in here with this inversion fair value gap. We don't want to see a break outside of that. If it, again, because we took buy side here, if we take sell side here, that's stops to stops. Buy side, sell side's already delivered. So from the low, right, to that high, once this low is violated, that becomes a balanced price range. It will also become a bearish order block. So that would set the stage for us to then try to target this, and just anything inside this. We, again, can't lose sight of the fact that this stuff that we just talked about is working within these monthly levels too. So we're inside this monthly fair value gap. We've used every single quadrant and it's basically continued to deliver, but it hasn't broken outside of it yet. Okay, so we'll kind of see what that's going to want to do. Again, if the DXY is going to rapidly continue to go higher, we should see the yields kick in line with that. And if that happens, that'll be supported by this going lower. And then that, as a result, would probably give us a pretty significant turn to the downside in a more long-term capacity when it comes to the indices, foreign currencies, and the commodities, right? They may look to, for a short time, maybe like, a week or two or maybe a month, give us a well-invited, a well-anticipated retracement or like a reversal. because we've just been unsustainably rallying to the buy side for the indices, for stocks. I mean, it's just a matter of time before things align to send it lower in a very aggressive capacity on those monthly charts, the quarterly charts, so on and so forth. Okay, so we got to keep that in mind because we're at a point where the bonds and yields may look to encourage that. What encourages that? This going higher, displacing above the high up here, dragging DXY higher. The bonds basically invalidating these lower levels. And then again, that would support us going lower for the indices and the other assets that have been just on a rampage this year. Okay. But yeah, until that is fully confirmed by breaking these levels, we want to definitely monitor how this is going to hold and if it's going to try to give us one more attempt to the buy side. Because if not, again, we may have to adjust from the bullishness that we've been behind the last couple of months to potentially being bearish in the indices. And then we could just continue to use these references to further help us navigate the possibilities of that, of this like going even deeper, or if this is going to be a short retracement that eventually ends up going higher. Again, that scenario is supported by this responding very positively from this retracement and going higher, and then we would see this go lower to support bullish indices as well. Okay, but yeah, again, we're at a turning point. We're at a time where data collection is needed. We're in a new month. Power 3 is relevant. It could go against whatever it's going to want to do this month. The first week of the month, manipulation, consolidation. Second and third week of the month, expansion, right? Generally, right? The lion's portion, the thick portion of the monthly range. And then the last week caps the monthly range. Very similar to what we talked about with the weekly range. How Sunday, Monday is consolidation, manipulation. Tuesday, Wednesday, higher low. The week is formed and expansion portion of the week. And then Thursday, Friday, if a PD array is met, it'll generally present us with the 30% reversal, at least for TGIF. That concept transferred to the monthly perspective, looking at the week's rolls. The first week, consolidation, manipulation. Second week, third week, expansion, right? The lion's portion of the body of the monthly candle. And then if a PD array is met or a logical target is hit, like a monthly PD array, right? Like a opposing order block or a fair value gap or a significant low or high, if that's met after those 3 weeks passes, going into that last portion of the month, right? The last week, you can expect the price is probably going to retrace, right? As long as all this stuff is aligned, right? And we've met a higher time frame target and it's been one-sided. Okay, so you can see why Power 3 is so important. You could think about it on every time frame, and the monthly chart is no exception. And you can kind of arrange your expectations from the week to the month, right? And there's 3 months in a quarter, right? So you can also do the same thing with a quarterly Power 3. Okay, they have 6-month Power 3s. There's a yearly Power 3 dynamic, where each quarter has a role to play in the Power 3, similar to what we just talked about here with the monthly range. There's 4 quarters in a year. So each quarter throughout the year is presenting a Power 3 delivery, right? And it has its place, right? And seasonality kind of shows you a template for this as well. This is stuff that people don't talk about. This is stuff people don't know because they haven't went too deep, right? And they just, they just don't know, right? They don't know how insanely fractal everything is, and why one time frame is not more important than the other, right? Unless you're looking at bias and narrative, but for the most part, everything is universal. You can use it on every time frame. Okay, so yeah. With that being said, like I mentioned, we got this wick in here, right? If we expect that this is going to hold in here for the bonds to go higher, then we're going to expect that DXY will turn around at some point, but we'll see what happens. So we're going to watch this level in here for the bonds. Hopefully you guys understand the yields too. We're watching this for value gap, see if it can hold to go lower. If not, it'll look to promote continued buy side delivery in the DXY. If this breaks down, that'll further justify deeper shorts. But for now, we're at a turning point. We have to watch the response here and see what this week is going to present us with to set the stage for the month. Okay? And then that's going to, again, have an impact on this, right? So if we think that this DXY is going to continue marching to this monthly high up here, which could be the case, we're going to have to obviously consider what we just talked about, right? We do see that down candles are supporting price here. If this is going to be supported and trustworthy to go to the buy side continuously, and we're going to continue to see this hold targeting this, we're going to have to see the bonds drop, right? So break down, disrespect any of this bullish delivery, right? The bullish setup, totally disrespect it, preferably smash the low quickly. And then we got to see this also displace above this. That would then get us to be very strongly bullish in the DXY. And with all these things discussed, right, if all that shows up, there's heavy impact happening towards those other assets. There's reverse correlated assets. And so if we can confirm that, we could then really easily trust that this would end up in this case, right, DXY goes higher and everything supports it, we'll be able to trust that this is not done, giving a pretty solid retracement. Okay. NFP not confirmed yet. Fred said, would you say at least the bonds and yields have respected their inverse? Yeah, for the most part they will. But in moments when they don't, you just got to realize that something's happening in the market. There's big money moving around because consolidation happens when they're accumulating. That's what they're doing, right? They're building liquidity or distorting time, which is at the same time building liquidity, right? So if they're not moving, something big is happening, right? They're building up for something grander, right? And we'll you have to obviously wait and see what that ends up being. But yeah, when the bonds and yields are consolidated, that sends shockwaves through the rest of the market because they're that influential. They're that important. Interest rates drive a lot of things, from car loans to business loans, many, many things. The interest that people get back on their investment with bonds, it's a vast amount of things that are impacted by those two assets. That's why we spend so much time with them. Okay. But yeah, so like I said, we'll see what happens. If we look at these time frames, it obviously looks like price is just really rapidly repricing, right? If the yields end up crashing down through the floor, this will be very short-lived, and we'll probably see another leg lower. But if not, if the yields end up blasting higher, right, disrespecting the weekly bearish fair value gap that we talked about over here, and then the bonds start to crash too, right? The bond market gets below this low. That'll rapidly increase the odds that this is going to keep running higher long term until something changes, right? And as far as DXY goes, we have this large wick here from this weekly perspective. We have a monthly high that's clearly in the crosshairs. We have the current weekly high from the previous week. We have the previous week's low down here, but honestly, it's a little much. It's pretty far away. I think we'll have to worry about that later. The daily fair value gap in here that we were using to try to justify that because it was failing in here. Last week we were trying to use this to justify continued down movement. But clearly the news event, CPI, I think, CPI rate announcements, or was FOMC rate? It was one of those. They were used to deliver us away from this PD array in here to react from this bullish order block. It was at a crossroad, right? Like it was either going to hold this and decline because it was inside this gap, or it was going to use this to then invert and then continue to rapidly reprice higher, which is something we talked about ridiculous amount last week in the private group. We walked this whole entire move, and then of course did what we had to do in the indices as well, relative to the failure of this daily fair value gap to hold bearish, and then its adjustment to then going higher, sending us down within this retracement, which wasn't too hard to get in line with. But yeah, this opened things up. After the small ranges, it led to large ranges only when the news event came out. So this move delivered aggressively away from this PD array only when a news event came out that was enabling it to do so. Okay, so it's just a beautiful example of higher time frame delivery using news as a macro. Okay, it was either going to be used to push away and confirm this even stronger that it was bearish, or it was going to continue to blast higher, invert it, and then use it like this. And we could see that it did the latter. Blasted higher after taking stops, respecting the order block here, respecting this order block too, these consecutive down candles as a BPR, right? Respected the 50% from this high to that low. And then now we got up above this high here. So this high to that low created a BPR. Once it got above it, traded down into it, inverted the fair value gap, blasted up to the buy side, taking out these relative equal highs in low resistance fashion because it was a failure swing, right? And then it got confirmed from this delivery in here. Okay. And again, all this stuff, although in hindsight right now, was talked about live, right? Real time as it was delivering. So, those that watch the video, this is not only hindsight. I'm doing this set like 6-7 days a week with my private group, 2 times live here on YouTube. So yeah, we don't do hindsight here. Like after the fact only. We do after the fact when we've done it real time in the moment, just for like review, right? And teaching and whatnot. So yeah, with that being said, again, we're watching this high to that low. We have now, if we take what we talked about with this high to low, creating a balanced price range, this high to low, once it breaks, creating a balanced price range, we're going to do the same thing here with this. Okay, so this high to that low, that becomes a balanced price range too. And if we go to, because we took the high out, okay, so if we're going to watch this hold, right, we also got the wicks in here too. So it's part of the balanced price range identification. That's also an order block. So if it trades into this, we don't want to see it spend too much time in that if it is going to be bullish. If we're going to continue to watch this high get taken, again, we very much want to see this break out to the buy side and basically disrespect this stuff. If we're going to be allowed to trust this is going to go higher in a very significant continued capacity. For now, there's nothing telling us that things are going to be bearish. So we're not going to go against that. If that's what it's showing us, we're going to keep pushing that until proven otherwise. What turns me to the downside entirely for the DXY, if we come down and break down below this low, right? That'll be invalidating the 50% of the range. That'll be shifting market structure. It'll be breaking through numerous PD arrays, and that would get us back in line with downside delivery. That would then send the indices higher. And then we would be able to go from there, from that point. But so far, this just looks like we're continuing to deliver a very large market maker buy model, and terminus is going to be completed up here. So that's what we're going to be paying attention to. So opening up, right, again, previous week's high, that's significant. Previous week's lows down here. We'll keep tabs on it, but the more important factor is going to be what's on this daily chart. I didn't mention this in the other assets, but it's also true for the other assets. Friday's high and low, when we start Sunday, Friday's high and low is significant. Okay, Friday's high and low is going to be that near-term liquidity pool for Sunday's delivery. And if we break out of it, obviously, we'll see how it's going to be used. But opening up, before it gets up here or before it gets down here, we got to break through this, right? It's got to break the low or it's got to break this high. So that is an important liquidity pool intraday going into Sunday. It's a previous day's range. So the previous day's high and low, the liquidity relative to that is significant for the current day, the current session, so on and so forth, right? And we'll see if we can get this to open up. If we're thinking power 3 for the week, we want to see if it can open up, drop lower if it's going to be bullish, maybe reach into this fair value gap here. That's also Friday's low. So there's liquidity resting below that low, mixed with the fair value gap here and a balanced price range, right? This high to that low, fully delivered through the high. and we got a pretty clear target up here it seems pretty reasonable, right? So to visualize what we're anticipating, if we open up, drop lower, maybe Tuesday, Wednesday creates the low of the week, and then accelerates by while respecting this, and then maybe we could see that bullish power 3 take place, leading us to this continued bullishness unfolding. Okay, preferably when we start the week, we want to see open up, drop lower. Maybe a news causes that. We'll be reaching into a bullish weekly order block, right? These consecutive down candles, which is also a balanced price range. So once it reaches down into that, ideally, that's what I'd like to see first. And then, of course, once that happens, we'll gauge the response and see if we can get in line with the bullishness that may come as a result of that. Because this is, at least what we're looking at here, there's nothing telling us to short. Even if it does short, I'm not going to pick a top. I mean, that's part of the rules. We wait. And hopefully over the last year, I know you guys in my private group, this point has definitely been driven home. But hopefully over the year, for you guys that only spend time with me here on YouTube, hopefully you guys have determined that there is so many opportunities that show up. It's unbelievably irrational to be thinking you're missing a move, or if you can't let price move or let a day pass because you feel like you're missing something. Hopefully that sounds irrational given all the opportunities that I showed to you guys and the tactics used that are fairly simplistic to make a decision, and then also build on some continuation variations of whatever model you have. Hopefully this year has definitely proven that to you, because it's absolutely something you got to come to terms with. You don't have to trade every day, and sometimes you got to wait. Like I just said, the best opportunity, is it going to be trading into this to go higher, or is it going to probably be for you to wait, let it print, show you the manipulation so you don't get caught up in the manipulation early in the week, and then try to get in line with something moving in the direction of the higher time frame move, right? Which one will be better? A counter trend move, trading into the setup, or when the setup forms inside of a logical PD array, and then when we get to see price moving higher, right? Within the larger narrative, right? Counter trend or with the trend, which one's probably more reliable? Probably with the trend. How do you get in with the trend? It's bullish. Do I just buy just because it's bullish? So anytime it looks like it's bullish on the 1 second chart, I'm just going to buy because it's been bullish? No, you got to wait, right? Just like how we have to wait for a model on the 1 minute chart, on the 15-minute chart, seconds chart, before we make a decision for price to move. You got to do the same thing here on this time frame too. You got to wait. Right? It has to trade into logical levels before you're going to get that rapid response that you want, that we all want, right? Trading to a PD array can be framed out, but you got to have experience to do that, to trust it. Because if you're counter trend trading and you don't understand, or not don't understand, but haven't operated with the mindset that I share with you guys, just simply right here, by waiting for things to set up. If you haven't been practicing that, and you can't trade with the trend reliably, how are you going to trade against the trend? Some of you will be counter trend traders. Some of you, that'll resonate better, which there's models I teach for that too. But for a lot of us, for a lot of students in the industry, it's better to go with the waves, not against it, unless you know how to surf pretty well back and forth. And that takes time. That's not something you wake up one day, thinking, oh, I want to be a trader, then all of a sudden you can trade buys and sells. I trade both sides sometimes, but I understand the dynamic between retracement, consolidation, and expansion. I understand when price takes a liquidity level, it's more likely that it's going to seek an internal range liquidity first before it looks to continue, because everybody and their mama is going to try to chase this. Same thing when it's bearish. I'd prefer to see a retracement first, get into that retracement level, then go. If it's very obvious, I don't have any problem trading to the PD array. That should set up the further move, in the grand scheme of things. But I'm only able to do that because I've had time practicing it, and this process that I've just outlined to you, I've used it for literally years at this point. So you'll get there. And if that's something that interests you, you're in a place with a mentor, with a person that's sharing his opinion that knows how to do this. I prove that I know how to do this. Both directions. We don't need one side. But you don't need to do that. It's good to know these things. But just know you're in a place where that can end up being a reality potentially. And of course, this isn't financial advice, obviously. Right? But yeah. So yeah, to keep it simple, my anticipation, I would like to see this drop first before it goes higher. So we'll see if that can be afforded to us relative to the things that I've just mentioned, like why I believe this should hold. Sorry about my dog losing his freaking mind. But yeah, that'll be what I'm going to anticipate. And if that's going to be the case, I want to see reasons for this to continue to support going higher. I want to see these levels get invalidated. I'd like to see this break down and start to collapse, reaching into some of these levels. Maybe at first it rallies up, right, for power 3 and then goes lower. Maybe at first this one opens up, maybe drops lower a little bit, and then just rapidly reprices higher off the heels of this 50% of this monthly bullish order block here that we talked about earlier. And again, if that all happens, then this will drop lower, rally up. And invalidation, like I mentioned, is this low down here for us to stop being bullish. So very simplistic. We do have the fair value gap in here and the order block. So those are my two layers of price that I'm going to be watching. All right, so we got the high of the order block here. We got the candle open for the order block. And if we go grab a little bit closer, in particular, this area in here is something we're going to watch. I want to see us open up and get down there first, because power 3 starts the week with manipulation and consolidation. I'd like to see us manipulate down there, maybe accumulate a little bit in there. And then I would like to see a rapid repricing if we're going to be bullish, right? If it supports bullishness, this type of delivery is what will make me extremely confident that we will be seeking buy-side liquidity. And I will gladly take intense short positions in the indices if that is something that takes place. And of course, if the chart shows that that's something reasonable to do. So yeah, we'll look at this. I'll do what I did the other week. I'll place color-coded arrows. So this here. So if the DXY is going to go higher, that's going to be supported by this failing. So I'm kind of like on the fence with this because we're in that turning point area where it's going to have to make a decision. DXY is rapidly repricing higher, so again, there may be something happening that the interest rates aren't showing us, something that's brewing in the background that's not necessarily known. And then, of course, if that is going to be the case, if DXY is going to keep going higher, then we'll have to see this get invalidated. We don't know yet, right? There's still a chance for it to hold. Nothing's been fully validated up until this point. So we're in a moment where it's better that we have the opinion of waiting. Let's wait for the best opportunity, you guys. Like, we're not here to gamble. We're not here to be such a gambler that even if full-time trading gets achieved, we'll have a miserable life. You have to be able to know when there's times to wait. Right now is a good opportunity for me to teach you about the times that you have to be willing to wait. You know, we're inside equilibrium from this low to that high, and it's kind of bouncing around. We're inside of a PED around the monthly chart that could be very strong in terms of reaction, where all of this is happening inside of a week where NFP is coming. And it may be needed to send price wherever it's going to go, to influence the rest of the month, right, for the monthly delivery. So we're in a time where we're going to have to wait, right? It's the start of a week. Remember, consolidation manipulation for the monthly power 3, right? The start of the month, right? The first week consolidation manipulation most of the time for the monthly candle. The start of the week is generally manipulation and consolidation manipulation for the weekly range. Okay, so again, another reason why we gotta relax, right? And on this higher time frame, we have these levels that hopefully have been made clear to you guys. So again, I want to see if we can get a decline first, then go higher. Set the low of the week, then rapidly reprice to the buy side. Okay, I have been a bit repetitive today. I hope it hasn't bothered you guys, but I'm doing that because I need you guys to have things burned into your brain, right? Like I'm really trying to make it so obvious what's important that it's undeniable, right? Like the Power 3 stuff we talked about today, the process, the step-by-step that we're doing today. Like I'm trying to make it like as obvious as possible, like what you need to be focused on, right? And of course, there's other intricate details we can get into, more advanced things, right? But you know what I'm sharing with you guys right now is like the conceptual elements that are building narrative, right? Building your fundamental overall like structured analysis process as far as what's important, you know, for bias and narrative, and what's important. How do you identify levels, and how do you think about levels when it comes to what should happen, and then what should not happen, right? What invalidates things, you know, what validates it. So hopefully I've been able to drive a lot of these points home. Plus Power 3, obviously, that's something that I need all of you guys to memorize. I mean, you could just spend the next like 3 months studying Power 3 and you'd get some pretty incredible wisdom just off of that. You know, Power 3 is going to be something you study for your whole entire life. If you're going to be a trader long term, you're never going to escape it, because every candle you see, you should think Power 3 happened there. I don't care if you're on the 15-minute chart. Power 3 happened relative to that time frame. And if you go down to the lower time frame, you'll see like the 1 hour, right? 1 hour Power 3. Each 1 hour candle, the start of the hour, right? The first, like what? If you could split the hours up into 4 pieces, right? The first piece, consolidation manipulation. Second and third piece, the middle portion of the hour. What would that be? If you break it down, the 2 middle portions, right? The 2 middle pieces to the hour, however you split it up into 4s, would be the expansion. And then of course the last 10-20 minutes of the hour is also the opposing view of what just happened on that candle, but to create the close and the ending wick, right? So it's on every time frame, right? Pretty much is what I'm trying to communicate. Okay, so yeah. So yeah, this is pretty much my opinion. Remember, Friday's high and low, very important. I don't have a mark because I don't want it to be overly busy, but you want to mark the Friday's high and low. And keep in mind this down movement here fulfilled the market maker buy model, right? And we've extracted external range liquidity, and so now we have a monthly high available that looks like it's in the crosshairs unless something changes, like this low gets violated. So we're going to keep that opinion. And then, of course, Power 3, it's a new week, so we want to see us go lower, seek a discount array of some kind. If we can fulfill that, that'll be a time, especially if a news event comes out, where we could frame out something to go back to the buy side, okay? So, yeah, I guess I will leave it there with the DXY. Just make sure... It's a weekly bullish order, but I don't want to confuse you guys. It's just a weekly bullish order block, okay? And so, yeah, we have that also to kind of justify if we get down into here, it'll be a fast movement away. Okay, so that's like the root cause of the movement, right? If it can get down there. That's what we want to see. We don't want to see it just rapidly, just nonstop. If it is, okay, that's great, but there's not going to be, much of a retracement. It's just rapidly repricing higher, and you'd have to adjust with that, get into continuation variations of your model, and lower your risk because it's just rapidly repricing. At least that's how I view it. When price is just not offering retracements, I'll use continuation variations, and I'll get in with lower risk because, the risk of it retracing is pretty high to try to get into this and then set it up once more. But yeah, so hopefully that makes sense. Let me see. That high on DXY is also quarterly. Yeah, exactly. Right, so you see a lot of overlap when it comes to the higher time frame levels from quarterly, monthly, weekly. So yeah, when they overlap, it's definitely interesting. But they're still significant, right? Doesn't matter what label they are. If they're within the parameters of those higher time frame perspectives, they're significant liquidity pools if they are reasonably looking to be targeted, like in this scenario. Okay. So yeah, let me know in the chat. Throw a 1 in the chat if everything makes sense. I appreciate y'all bearing with me. We'll continue to move through this fairly quickly. All right, so you just throw a 1 in the chat. I won't keep you guys here for too long. Nice insight. Yep, yeah, it does. It does. I agree, Fritz. All right, cool. Okay, so now we'll go to the currencies. Those of you that have been with me for any length of time for the last couple of months, we've been calling for this low down here to potentially be a target if DXY was to rally before any of this even took place, right? More so when it hit this, right? We were talking about how we could continue to monitor this and trust that it's going to keep going lower. We did have a bullish order block in here that was a bit skeptical. This was all high resistance delivery. You see that being the case with the heavy retracements. So we were kind of in a turning point idea, right, where price had to make a decision. And we framed out this as the draw on liquidity for literally weeks. And those of you that were with me, that have been with me, you can vouch for that. Isn't it beautiful to see that fully manifesting finally? Took freaking forever. But yeah. And then, of course, we saw this rejection. The SMT definitely supported the delivery going lower. It was just a very sloppy movement. In these countries, there's a lot of stuff happening within their communities. There's just a lot of political insanity. And then there's also, just bad financial decisions, crime, and just nonsense taking place, right? So that's partly the reason why a lot of this is so rough, I'm assuming. It's kind of just the way the cookie crumbles. I don't trade this. I used to. This was literally the first asset I traded. I traded was GBP USD. It was my favorite. It got me my first 2 FTMO funded accounts back in the day. And that kind of sparked my career, I guess you could say, until they, stopped serving U.S. clients and stole $60,000 withdrawal and canceled my accounts. That was a fun experience. But nonetheless, this was my baby. And that's why, it was my baby. But now, if I was to trade currencies, I'd probably trade this one. But now we just use it as a reference. And it doesn't matter how nasty it could be, we're still able to correctly call the market. And it's a beautiful thing. Right? So again, if the DXY is going to rapidly reprice higher continuously, we will see that continued to be confirmed in this overall price action. If we go to this 2-week chart, we could see how we can now frame out a mitigation block. We don't necessarily got to highlight that, make it more messy or more busy. We could just simply use this monthly bullish breaker that was holding price all through this as now an inversion on that higher time frame to help support us with the down movement. If the DXY continues to rapidly go higher, if the bonds do end up smashing through this low that supports downside currencies, and if this goes higher, that supports bullish DXY downside currencies, downside indices. Okay, so we'll see if those things can fall in line to help us further commit to the fact that this is going to continue to drop. Otherwise, we're just going to have to continue to push this lower until proven otherwise. Only way that I would be bullish on this asset is if we can get back above this high up here. this swing high. Yeah, I think that would be reasonable. Only way it would be bullish is if we can get up above here, because that'll then disrespect these up candles, which created a bearish order block. This down wick, right? It has really respected that. Kind of talked about that when price was trading in there with my private group. And we just rapidly repriced lower and now swept this big time liquidity pool. Okay. If it is going to be bearish overall, I wouldn't be surprised if we do open up, race up into some of this level. Maybe the fair value gap here. So yeah, power 3 could end up doing that, right? Running maybe higher to then maybe go lower. That would be in line with this going lower to go higher. Okay, you could see the opposite effect taking potentially visually being in place without even seeing it take place, like real time. We could already visualize that taking place just by thinking about it. And it makes sense. It logically makes sense if they were to continue going lower. If this was the 5-minute chart, you'd want to see that happen anyways as well, because you'd need a fair value gap to enter on, right? For those that trade the YouTube model 2022. I mean, it's the same expectation here, right? But this is just a higher time frame. But placing it, that same opinion or that same process you would have on the lower time frame, or that same perspective from the lower time frame onto the higher time frame, it kind of helps you learn the reason why at certain times you got to wait. Just like you got to wait on that lower time frame, you still got to wait on the higher time frame too, right? For moves to set up that are reasonable. We're not just taking random trades all the time. We're not just throwing executions in randomly. We're waiting for our model to go to specific levels, then we execute. If you were a swing trader, if you were a trader that only took trades on the daily chart, you would have to wait for these things to take place, right? So for big moves to happen, you got to wait for those big move scenarios to unfold, right? Like this fair value gap being traded into as a potential bearish PD array to then respond to push price lower, maybe to target some of this stuff. It has to get up to that first. External range has been taken. So now because stops have been taken, external range has been taken, our mode of interest now is aiming for internal range liquidity or an internal range PD array before we can look to try to justify another continued move. It may not do it. It may just continue to melt. I don't care. That's what I want to see, and that's what I encourage you guys to want to see as well. Why is this important? Because it puts you in the best position to frame a move that's worth being in, right? One that's going to be reliably dynamic rather than being caught in a consolidation after price just took out a low, trying to force a buy or a sell, right? Or force a sell in here that may retrace, right? You might as well wait for it to do that very thing, get to a reasonable level, and then try to find your model inside that around that time, right? So again, I hope this stuff makes sense as far as why it's important. But again, for this asset, we're going to be looking for, if it's going to be bearish, line in the sand is up here. That stops me from being bearish. I want DXY to rally up. I want the yields to continue to rally up to drag the DXY higher. I want the bonds to decline, which would support this movement continuing to drop. And to start this week, if I was to trade this asset, I would really want to see the start of the week at least rally, try to get us to some premium array like this, and then look to continue to tank. If it leaves this open and it just trades a little bit and, like responds really aggressively to this or responds very aggressively to the 25% of this monthly breaker, right, which is somewhere in here, and then if it responds from that, then so be it. This will just end up being a breakaway gap. Okay? But yeah, I mean, that would be very confidence building for this being exceedingly bearish. But we don't have to have it left open. It'd be okay if it got up there. Doesn't change the opinion unless this high is taken. Okay? So again, hopefully that resonates. Hopefully you see the value in that and just reinforce some of the stuff you guys have learned. But yeah, that's my opinion. I want to see if we can continue to see this go lower. Okay? Until proven otherwise. So yeah, retracement to go lower. Okay, that's what I want to see happen. Now we finally made it to the final stretch. Maybe I'll talk about that later. We made it to the final stretch, right? We got this fractal high that's formed, right? 1, 2, 3 candles formed. So if that's going to be something, that continues, if this continues to want to drop because DXY is going higher, which is what I would like to see, the next 1 to 2 candles after this candle that just formed may be reasonably afforded the ability to go down even further. I do see that the S&P damn near closed this in completely. It didn't. It tried to, but it's pretty responsive in here. And we now have overlapping candles as well. So when prices overlapping candles like that, it's not necessarily the best time to trade. This obviously, this overlapping candle portion of things happened towards the end of the month. Like I said, the last week can generally be a rejection against what the monthly chart did. This is the start of the month. Okay, this was the start of the month from October. Manipulation for the next going into the second week, the second and third week had set the stage for the low to form in the bullish move, right? And then the third week rallied. Oh wait, was there that many weeks? Holy crap! Damn, October had 5 weeks. Oh wait, I think that's normal actually. I think that's. Tell me if I'm wrong. If I remember correctly, I think October is one of the months that has damn near like 5 weeks involved. Yeah, that's very interesting. Maybe I'm tripping. Yeah, it's 5 weeks. Yeah. So yeah, you could kind of see. I mean, it kind of throws it off a little bit, but nonetheless, the middle 2 weeks, low of the week, expansion, going into the very last portion of the month, right? The last week, price ended up giving us basically a retracement, a bullish tone, but retraced pretty much against it, capping the overall month, right? So the whole monthly candle, you could see the body, right? The open happened over here, the wick was presented down here, and then the body formed all the way up here. Then it started coming off the high, creating a wick, and then the close of the body basically was formed from basically here to the open here. Okay, so the weekly candle was like this, with a wick down all the way to here, and then a wick up at the high. This wick, this is a good way to look at it too. The low of the wick on a bullish candle, it happens within the first week or two, because that's consolidation manipulation, right? To set the low, or for the bullish candle to set the low, and then the 2 middle weeks send the body, and then the last week is when basically the upper wick forms, right? So you can break it down like that too, if that makes sense to you. Hopefully that made sense. You could visually see it here, and you could visually see how valuable that is to understand when it comes to price navigation, time frame to time frame. Okay. And so yeah, like I said, if we are going to see DXY rally, that's going to continue to push this lower. We're not going to assume that that's just going to be the case. With no contingency plan, it may reverse, right? And that may send this higher. It is a time where we're going to have to wait for more intel. We are still bullish. Overall, things are not going to be bearish for a while in terms of narrative. But we may see the next couple days, because of the fractal high that formed. And if DXY is going to keep going higher, we may see the next couple days result in price pushing lower, especially if this next month is going to end up being bullish. The first week of the month may give us the opposing view. It may set the low of the month, right? By trying to push against all this stuff that's taken place, especially if DXY is still moving higher and isn't ready to turn around yet. All right, so that is something I want you guys to think about. Okay, we do have the Dow that filled in the entire gap, pretty much. Let me actually... Yeah, it kind of already balanced out the nonsense that it created. I mean, the Dow's just a mess, right? So yeah, we'll have to keep our eyes on this suspension block levels, right? All the quadrants within that, it's still a PD array, so it has quadrants. It still has a inversion mechanism. So if it breaks down below it and gets below this level, it'll be used as an inversion. But we're not going to just assume that, right? Going into this week, I think it's going to be best to let Sunday pass, see what it wants to do, and then kind of see what the tone is going into Monday. If we're just going to go off of what price looks like here, overall, we may still look to continue being bullish. It may drop once more. Maybe that's something tradable for you if you're comfortable with counter trend trading. And then maybe it wants to get back in line with going bullish. But if the DXY continues its rampage and the yields end up rampaging to the buy side, this may end up becoming a long-term high if an intermediate term high can form like this. And then it gets violated, right? Because we have an order block here changing the state of delivery. And if we can come down into this, basically reject, create this into a reversal that leaves an order block that then gets violated, that completely confirms that order flow is now going to be bearish. So if something like this happens, that's when I would be overwhelmingly bearish and not really worry too much about bullishness. But if this just continues and we stay above this and it really has a hard time, maybe shows a lot of wicks to the downside and doesn't really feel like it's interested in breaking through these lower levels in significant fashion, we'll continue to hold on to the buy side delivery, and then classify turnarounds going lower as counter trend moves, which calibrates us with risk. It cuts us down to at least 75% of our normal risk or 50% of our normal risk, until obviously it proves that it wants to continue going lower, which the scenario I just painted would basically confirm to us. All right, and if we go down to the daily chart, again, Friday's high and low is very significant. We're going to keep tabs on that. We got the previous week's low here. We do have a gap that's available for the NASDAQ. I would not be surprised if this fractal high leads us to try to get down there. I want to see if we could try to get down into that, actually. I think that'll be something that I really would like to see. If DXY wants to continue rallying, which it looks like it does, I'm going to keep my attention here until proven otherwise. See if we can't get that to get targeted. And that may just simply set up a drop to go higher. So because structurally it hasn't changed from bullish to bearish yet, just because the DXY is rallying higher, I mean, that's not going to change stuff. We still need to use our validation principles because they don't change and they're always present and relevant. Okay, and this is Friday's low. So we'll keep tabs on that. And then, of course, we got Thursday's low. And then, of course, we got the rest of the gap in here that could be targeted. This fractal high in here makes me lean more towards the fact that we will probably be more likely to reach down into this before any buys are going to be available. So I'm going to assume that if we're going to be bullish this next week, we're going to open up, drop down, maybe sweep some of this, maybe target this this gap in here, and then we'll determine what price wants to do once it gets there. If it gets there, we'll determine if it's going to be trustworthy to go higher or not from there. It shouldn't spend too much time there if it is going to be bullish. It should tap into it, spend little time, and then start to really move, especially with the news schedule this week with NFP and whatnot. But yeah, I'm going to need a very significant amount of price delivery, at least what I just mentioned, a low, a retracement and then a failure to deliver that retracement to the buy side. Basically like this, like I said. I would need something like this to take place for me to be getting completely away from bullishness. And at the same time as that's happening, I would also want DXY to be rallying in that regard. And then the yields going higher, the bonds tanking. And then I'd like to see at least a good portion of all these assets confirming that, right? Supporting that idea. Otherwise, this can very easily just be a retracement to go higher. Okay, because narrative has not changed. We're still going to stick to the higher time frame bullishness. Nothing has changed whatsoever. We are due for a potential retracement, something like this. It's just been rapid, right? It's at all-time highs. So we do not, because we're at all-time highs, we do not try to sell into that. We don't pick a top. And if we do look to counter trend trade, it has to be in a scenario like this, right? Where it's reaching lower to a logical level that we could reasonably use to then frame buy-side delivery again, right? You frame that out, and then you frame the wicks too. If you find big wicks that are down below, those are your targets too, right? To set you up for further buys. If you want a short inside of all-time high delivery, you're really risking it because it doesn't have to come down here. It could just keep ripping to the buy side because we're not in bearish order flow. So why fight it, right? Unless you know what you're doing and are okay with the fact that, if you take a short in a rapidly moving market that's at all-time highs, the risk of you being wrong is definitely pretty relevant. And if you're going to be hurt by taking one or two losses to the point that your whole entire confidence and worldview about trading gets shattered because of that one loss, it's better to not trade against the trend. It's just better not to. Until you work that out, until you're okay with taking losses and you're able to reasonably, deal with it, it's best to try to put yourself in the best positions. And what I'm mentioning here, right, price getting to a PD array that could launch price back in line with the higher time frame bullish narrative, that's probably the best bet. And for those of you that this resonates with, I mean, that's a way that you're going to be limiting your engagements, right? Much more than you probably are right now. Right, waiting for higher time frame levels to be met, then looking to try to find something to operate within. And if it's aimlessly delivering on the higher time frame, it's not really reaching for anything yet, then you got to wait. Okay, so that's a way that you could do things. I have one student that does that. There just should be more, honestly, because that's the best way to do things. It forces patience, forces discipline, and you're putting yourself on the chart when the best opportunities are there, especially if you're new. If you're a little more, experienced, you can obviously find something every day, but you're going to have losses, and you have to be able to understand why and be able to move past it pretty easily. All right, so again, this is what would turn me to be bearish if we break a low like this. And if we get down into here, I wouldn't be surprised if we open up, try to get down into there, especially if next week's going to be bullish. I definitely want to see if we can get down here because that would be beautiful. If it can't, and it just keeps going higher and we get above this Friday's candle, it's just a testament to how bullish we are. And it's still not done. Okay? So because things are kind of overlapping too, we got to wait, right? We're in consolidation. In a potential retracement, right? But we got to just wait and see what it's going to want to do inside this and see how it's going to treat this, right? Still got a little bit of the gaps available on S&P. Definitely have a lot of the gaps available on the NASDAQ. So unfinished business is down there. If you look at the highs right there, these highs right in there, we got SMT that formed, kind of instigated the reversal, right? This high had a failure swing while the S&P and the NASDAQ created higher highs while the Dow didn't, okay? And you can see the Kraken correlation led to smart money going against it or profit taking, right? And then resulting in the reversal, okay? But yeah, so in terms of the important elements, what I'm looking for. Hopefully this makes sense. Friday's high, Friday's low. We basically traded into this gap, right? Or this suspension block. We kind of closed outside of it again, so that's kind of interesting. And then for the S&P, we got the wick quadrants in here. We'll see if that can continue to be significant. And yeah, I would really honestly like to see us get down here and then see if we can get price to move higher. If it does look like it wants to continue and get down there, I'll probably look to trade towards that. And then once it gets down into this, if we can get a strong response away from it, maybe towards the later portions of the week. I mean, we may have price open up and next week be bearish, like entirely. It may open up, rally up a little bit, get people enticed with the all-time highs, and then decline aggressively, right, reaching into this, leading up to the end of the week where NFP is. And then if NFP comes out, all of that delivery could get wiped out, and the reaction from this PD array in here may be turned on to the buy side as a result of the release from NFP after it dropped the whole entire week. I mean, if you were smart money and you wanted to fake people out and fool them out, knowing the dynamics of what I've just described, I mean, it just sounds like it would be reasonable for them to do something like that. You can visually paint that picture, and it makes sense, right? If you were smart money and you wanted to punish people as much as possible and you didn't want nobody to win, and you know that everyone's chasing price to the buy side, I mean, they've slowed it down here. There's people that think the tops were picked, and there's also people thinking that, this is probably a good buying opportunity because it's been bullish. Wouldn't dropping down to this level and then accelerating it upset pretty much both sides? Anyone trying to buy would be stopped out, and then expanding aggressively to the buy side for people that are trying to pick a top, they'd be getting wiped out too. So I wouldn't doubt that that's something NFP can bring. Assuming that we have NFP, right? We may not even have it because of the tentative view, because all the drama, right? So we'll see. We'll see. But nonetheless, that doesn't change these things that I have my eyes on. So again, I would like to see if we could retrace, see if it can't give us the response I'm trying to look for. With the rejection lower, maybe reach into this gap, try to fill that in a little bit, which is a new week opening gap. We have another regular trading hours gap down here that I was talking to my private group about. We have a lot of regular trading hours gaps. I mean, they're literally just like sitting all over the place. Right here, I think there's another one down there. Right, like if we go here, I'll show you the regular trading hours gap I'm talking about. This one here, massive. I mean, that's another reason why this should or could look to target the sell side. That's inefficient. We've taken external range liquidity. We're now seeking internal. So we could clearly see with the regular trading hours x-ray vision, okay, that there's a gap in here that most people are not thinking about. And then there's another gap even deeper that could be a reason for them to pull lower right down in this area here. That's totally inefficient. So with a rapidly repricing DXY to the buy side, I mean, that makes this totally feasible. Okay? So that's stuff that I'm going to be trying to pay attention to, okay? And we got this wick here, right? We got the delivery higher, lower. If it breaks down below this, if it's going to continue to drop and support that, any retracement into this should be met with resistance, and we should be able to leave this high available up here. It shouldn't even try to come back up there. If it does get up there, again, you put yourself back in line with the narrative, and it's just another reason why you don't pick tops, because this is a possibility, right? So we gotta just let price kind of print a little bit, right? Think of power 3 and engage in the best opportunities. There is SMT on the 4-hour. Yeah, no, we talked about the SMT up here with the Dow, this high up here. Right, if you just go back to this right here, what I just showed you right there, what you just observed is literally right here. We could see it. We don't even got to go to the 4-hour to see it. Oh, we're talking about the lows. Is there? Oh yeah, there is. Yeah, so we got SMT on both sides. So let me ask you guys this, because you pointed that out, Fritz. How do we validate which one is more likely to be trustworthy? Generally, right? How do we validate it? What do we use? Damn right. Good job, Tyler. DXY. Right? And if DXY doesn't help us, what do we use to further solidify? Like if DXY is consolidated, what do we use to solidify outside of DXY? What's the next best thing? In my opinion. Bonds and yields, exactly. Right? And then, of course, you can also kind of couple everything else as well to further justify, like currencies, right? See what they're doing, commodities, if you want even further reinforcement. All right, so there's really not much more I have to mention. This is literally all I'm going to be trying to pay attention to, not too crazy. Again, if whatever the bonds and yields do, if the yields rally and get up above these levels and start really repricing, that is bullish for the DXY, bearish for the bonds. If the bonds decline, all of these three relationships, if that happens, lower bonds, higher yields, higher DXY, that'll have a dramatically bearish impact on the indices. Okay, and then that'll literally set the stage for this with so much certainty that it's absolutely amazing. Okay, so those are things that we're going to watch. Hopefully you guys got a ton of value. Appreciate you for saying that, Tony. Powerful session. Hopefully many of you guys are able to follow along. Hopefully all of you were able to follow along. If you're kind of new, maybe there's some stuff that you didn't really understand yet. But I mean, that's just kind of part of it, right? Just keep showing up. You'll definitely get it eventually. I do have a private group if you guys want more one-on-one access. The enrollment for those one-on-ones, or the access to one-on-ones, like access to me in terms of one-on-one capacity, that ends on November 20th. And I will open it up again, probably like at the next quarter after that, which would be pretty much second quarter. I only accept 20 students per year. I have 9 slots available right now. So for those of you that are interested in that, that is an option. That's a tier 2, basically a tier 2 student in the apprenticeship group. The tier 1 students, right? The tier 1 access, obviously that's live calls and whatnot, and a lot of value still. Just no one-on-ones, no pre-recorded videos from the one-on-one sessions that I have with my students, and some of the extra amplified videos. But you do get access to live calls. You do get access to the community. You can ask questions with people that have been where you're at. Lots of very, very effective traders, and the community is just growing, and it's getting amazing to see everybody catching up in skill set, and then pulling each other up as they rise. That's one thing that's amazing about this group, both here on YouTube, my free Discord, but then also, of course, in my private group. I mean, it's incredible some of the stuff that comes out of that group, So yeah, again, just a reminder, because it is closing on November 20th, for those of you that are open to having one-on-ones, and you do feel that's something interesting to you, because maybe you like how I teach and whatnot. It's only going to be available till November 20th. After the November 20th deadline, it's going to open up again in the next quarter-to-quarter basis. This happens. But then if you wanted to just be a part of the group, hop on more live calls and have access to the community, you can always go with the tier 2 option, because there's unlimited slots for that. The limit for the group is going to, if it got too big, I wouldn't let it get too big. I'd only probably allow 200 people at least, or at a maximum, because I still want to be able to have a relationship with you guys, even if you're not a one-on-one student, because no one's more important. I'm just, obviously my time is limited, so I can't just teach everybody one-on-one, because it just wouldn't work. It's impossible. I've tried it, trust me, and it doesn't work. So there has to be a way to filter and limit and while still being able to offer it. You know what I mean? But I do my best to give you all value. I don't hold back on anything, regardless of it's YouTube or in my private group or one-on-ones or not one-on-ones. I still try to do my best to get you information that I feel is relevant and can help you succeed and at least gain clarity, because that's something I can guarantee you, spending time with me on these calls in my private group or in one-on-ones, the one thing I can guarantee is the fact that I can get you to clarity or close enough to clarity that you can get it on your own. I can't guarantee profitability unless I trade the trades for you, and I don't do that. That's not something I provide. I do give signals in a way, right? When I'm mapping out where price is going to go and saying, this is probably a good opportunity, I think that's a pretty clear indication that that's probably a signal. Okay, I don't have to give stop loss and take profit and all this. Like if you stick around, you get a feel for how I teach and hop on the videos and watch the content. You get a gist of how things operate. And it allows you the ability to do it on your own while still like a guided process. And then when you achieve the things correctly, right, you engage the market correctly, it's not, I just copied him. It's I really had to work for this, even though he kind of bumped me in the right direction to keep me on the right path. I'm still able to be confident that I did this, and I can feel good about that. And then of course, I can get a little tiny piece of the credit for being that tour guide, essentially, right, and just keeping you on the rails. All right, so yeah, for those of you that may be new, maybe you didn't know that about this community, about me. Maybe you didn't know that I offered one-on-one, the ability to be with me one-on-one. I got many crazy testimonials and students that I'm sure are more than happy to vouch for the things that we do. But yeah, you guys are in the right place. Hopefully you guys get value every week. Again, thank you to those of you that hop on continuously. Sorry, today's call was a little bit longer. There's some stuff I wanted to make sure that I really nailed down early on, like Power 3, the weekly ranges, the characteristics of each day, how Power 3 works on every time frame, the current conditions that we're in, start of the month, start of the week, end of the year, right? It's November, right? So November, December, January, and the summer months, they're generally more of a rough time. If things are going to get rough and you're going to have times where things are a little bit harder to read, for new students that haven't really been through the seasonal effects and studied it, you'll notice that things will go in and out. It'll feel like you're on fire on one month, and then the next month you come in and it'll feel like you just cannot find anything. And that's just the ebb and flow of the market. Doesn't mean that's a true statement that you can't find anything, because you absolutely can. I've showed it for 11 straight months. Every single day there's something to call out profitable, right? Hasn't been profitable every day. I've missed some setups. I've taken losses by getting stopped out. Bias and narrative has been correct. Literally, I can go out on a whim and say 95% of the time we've known where price is going to go. And here on YouTube is one thing, but I'm in my private group. It's every day, okay? Every week, every month, quarter to quarter this year, publicly. So, again, you guys are in the right place. Don't stress yourself out. Again, hopefully all this stuff made sense. And, thank you guys for spending so much time with me. Those of you on YouTube, if you guys got questions, let me know in the free Discord. Those of you in my private group, let me know if you need anything. I'll be here to help today if you need it. Do you guys have any last minute questions before we put a ribbon on this? Thank you guys again for liking the video and subscribing to the channel. It definitely helps the channel, because I'm really sincerely trying to help, because I don't have to do this. I could just be in my private group. I want to make sure all the value gets spread no matter what, because I understand hard times. I was homeless at one point in my life with my family, so I know how it feels to not be able to afford anything. So trust me, I understand. That's why I do it, right? That's why I'm here on YouTube. And Mike, you're welcome, brother. Fritz, no worries. But all right, yeah, with that being said, if you guys have any questions along the way, let me know. Don't neglect your studies today. Hopefully you got value from today. And yeah, with that being said, I guess I'll catch you guys on the next one. Yeah, God bless you guys. Have a good rest of your weekend.